Tapping into your retirement account to buy a house used to be a guaranteed way to lose 30% of your money to taxes and penalties. Image showing a $50,000. Withdrawal shrinking to $35,000 after taxes. Penalties, however. 2026 Home Savings Act is completely rewriting the rules, allowing more people to access their down payment without the heavy IRS sting. The smartest way to use your nest egg is often a 401k loan, which allows you to borrow up to $50,000 from yourself without paying taxes. Since you are paying the interest back to your own account instead of a bank, it is one of the few ways to borrow money and actually grow your own net worth. If you don't want to take a loan, a hardship withdrawal is now becoming easier to qualify for, especially if you are a first-time home buyer in this market. You must be careful because if you leave your job before the loan is repaid, the entire balance could become due immediately or trigger a massive tax bill. New legislation is even proposing that you can gift these 401k funds to family members for their down payments without incurring a gift tax. Before you touch your retirement savings, you must verify if your specific employer's plan allows for these primary residence distributions. By combining your retirement assets with today's stabilizing rates, you can finally bridge the gap to homeownership without sacrificing your long-term security.